Hi, welcome to this Sphere Day, which is on the 28th of June. It's Sunday. We've just been looking at finding high probability entries into big trends where not only do you have high probability, but you've got really good risk to reward, low risk against high reward on the other side. Now, in terms of the way we trade support and resistance, we just use very simple techniques, but they're effective over the longer term and they work. Now, in relation to trading big levels, I'm going to look at a few trade setups today. They all include the Japanese yen. We are going to be looking at AUDJPY, CADJPY, EURJPY, USDJPY, and finally CHFJPY. JPY, this moment in time for us, looks a fantastic money-making opportunity. Such low risk on yen longs, but massive profit potential on the other side. Right, let's go through the techniques and look at all the trade setups. But just before we do so, just always keep in mind, this is my view as of right now. Of course, it can change in line with market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you just click on the link beneath this video and you can get live access to our member center. You can also follow us on Facebook at our Facebook page and join our Facebook group of traders as well. Now, in relation to the Japanese yen, before I go and look at the pairs, I want to look at the stock market because the yen is being heavily influenced by it. The yen went down recently because the stock market was strong. The stock market has started to weaken now and the yen has got stronger. Stock market breaks a key level of support to the downside. That is really going to generate some great upside in the Japanese yen, in our view. So just a quick look at the stock market first of all, and then we'll move to the yen pairs. All right, on the S&P 500 daily chart, and if you're trading the Japanese yen, you want to keep an eye on it because stock market strength has tended to weaken the yen. Like I said in my intro, the stock market weakness will really firm the yen. Now, in terms of the stock market, just go through this chart. You had the big sell-off when the pandemic started to hit the global economy. But look at the rally back. We rallied back strongly, retraced all this year's declines, got above 3,200, get big red, okay, hits 3,000, bounces, goes through slightly, bounces, tries to get back up, can't do it, and then kind of lower highs. And on Friday, we crash into the 3,000 level, just above it. Now, if this level breaks here, you can expect a big sell-off, in my view, and the yen to regain traction to the upside. Now, even if it doesn't break down the stock market and just chops around sideways, I don't think the yen has got any downside. It's just that oversold. Now, in terms of will stocks break lower, we don't know. But what we do know is next week, we get quarter-end fund portfolio rebalance. What does that mean? It means that every quarter funds will assess whether to take money out of stocks and put them into bonds. And the assessment, this moment in time, a median of bank forecasters, 65 to 75 billion outflows from stocks to bonds. That's obviously going to weaken stocks. Up at 60, it should be 65. Also, you have retail traders long, and they're very bullish, and they're very confident. And this is a really telling quote, okay? It's from a sort of retail trader who's just got in to stock trading. And he makes this quote, which is absolutely arrogant. He's been lucky. But what he says is, all I hear is old-timers say that the retail bros are going to get crushed. Yet here I am beating them like a drum for the past 3 months at their own game. He even slags off Warren Buffett, okay? He's been lucky, he's cocky, but a lot of retail traders, they've been lucky, they've been in on the big rally, and there's too many of them long, they're too confident, and they're too over-leveraged. And this guy here makes a good point. He's from originally Cantor Fitzgerald, big broker, Peter Caccini, if I pronounced that correctly. He says, Portnoy's attention-getting wild style is emblematic of just how emotional extreme equity markets are now. there's a bullish extreme, and stock markets do not reflect the economic fundamentals, which is we're probably going to face a recession going forward. And stock traders just too cocky. I put this quote in as well, which is from the author of The Black Swan, Nassim Taleb, and he put, if you don't have a tail hedge against stock market volatility, big volatility downside, I suggest not being in the market. We're facing a huge amount of uncertainty going forward. What he means by that is, stock traders are just too confident. So you could see a breakdown, and if you get the breakdown, watch the yen really move sharply higher, even without a breakdown, just chopping sideways. The yen is going to do well. Now, what we're going to do is we'll look at the most correlated currency pair with the stock market first, which is AUD JPY. All right, AUD JPY daily chart. I'm using charts on our member center. For any members, I've done an additional update this weekend because I expect an active open when it comes in a few hours. So I'll update as per usual tomorrow at the usual time as well. Now, in terms of this chart, if you were to put it against the S&P 500 chart, it's almost a mirror image. Now, we've actually already got into this trade at 75.50, but we're looking to increase our exposure. Now, when the stock market surged above the 3,200 level, we just didn't think, the S&P could hold up there, and basically we sold on that candle. We crashed down. Then we get this blue candle here. And we notice now, or you can notice now, it's finding resistance at 74. Again on that body, we go through the 74 level, can't do 75, we'll get through 75, settle below 74, poke at 74 again. Then we go down, then we find support on that blue. We're going to have another go at 74, can't get through, and two little candles. So we got 74, 75, big round numbers as resistance. Now, in terms of coming this one fresh, you've got good support here, okay? It's where you really bounce off the 72.50 level there. Just let it go, or let it break and come in. 72.40 would do it. And then if we do break 72.40, we would bring our stop down to 74.50. Okay, so a couple of hundred pips up on this one already, but the potential moving forward is fantastic. Because if we break here, I think we could go all the way to 65. That's 750 pips. There are levels of support in between, like 70, 67.50. You manage the trade as it goes, but for us, this one could really have a great break to the downside. It's 5-1 in terms of risk to reward. A great looking trade setup in our view. And when we're doing charts, it's just for anyone new watching our videos, we will look for clues in other areas into market analysis, like the stock market, for example. But we'll also use sentiment tools, and our favourites are COT Net Traders positions. And if you go and look at the COT Net Traders positions, you'll see that smart money has sold the AUD heavily everywhere. And speculators are bought. Speculators are heavily long. Smart money is short. So that lends even more weight to our view that we could see a breakdown. So for fresh positions through here, stop can go behind the first level of resistance once this level gives way. Okay, good looking trade setup. Another one that's a good looking trade setup is CHFJPY. This one doesn't track the stock market as like the EURJPY. Let me just line my chart up. But it did have a big surge up with stocks. It's also influenced by oil, which has been pretty strong recently. Again, we've got a very early entry, 81.30, and again it's another 200 pips profit so far, but there's another 400 to come, I think. After the big breakdown, you find support, come back up, down, and trying to get through this 20-day moving average, which is the green line, which we always expect to act as resistance if we're bearish. And you got some candle bodies there providing resistance. That's a good level. 3 small candles. I just think we're going to break lower. So you've got 78.31 close, that's 78. Go 77.80. So you just get past the round numbers. There's always a lot of order flow around round numbers. Then we could go to 74. So yeah, around 400 pips profit, not too much risk. A good looking risk to reward trade setup. Okay. AUDJPY as our biggest weighting, but this one we've done a small trade in this one as well. And there's a few other yen trades we've got. So let's move to one that's been a favourite of ours for a good while, which is EURJPY next. All right, EURJPY daily. Now this one doesn't track the stock market, or is not so influenced by the stock market as AUD, JPY and CAD JPY. It will suffer, the euro, in risk off against the yen. I mean, all currencies will suffer in risk off, but this one, I'm really keeping my eye on the euro fundamentals, which I just see is totally bearish. Okay, now look at the euro rally up here. We've noted this in videos we've done in previous weeks. Why did the euro rally so hard? Well, the EU Commission proposed a rescue fund, 650 billion euros to help the poor nations that are in trouble. Market took that as very bullish. We were saying at the time, the fund probably isn't going to get approved. And even if it does, it's too small anyway. So we were looking for a failed breakout here as we got above 124. No more buyers. We come in at 123.55. And we're lucky with our entry because we plunge straight down. Then you get a blue reversal and you're poking against this resistance level here, which is these bodies here as well. It's 120.70. That's good resistance in our view. You've got trade A in between, which is at around 121. And we've got a stop back behind this level here. You can see my stop level there. It's our top performing yen pair at the moment at over 300 pips, but there's way more profit to come in our view. Where would you sell if you wanted to come into this one? But I haven't drawn the line in. It's in our member centre. Members know that I like to sell through round numbers, so it's through that tail there, 119.70, and down to here. So if we go through there, sell. Good risk reward trade again, near enough 5 to 1, and of course you can bring the stop down as we break lower to just put it behind the 20-day moving average. Really like trading EURJPY over the last couple of years. It's been the pair we've made the most profit out of, actually. And now hopefully I haven't cursed this trade by saying that. But yeah, really like the look of EURJPY short. Let's go and have a look at USDJPY. Now, in terms of the JPY, I think it's got more potential in the crosses, okay? Yeah, because I'm actually bullish of the USD as well. But the USD will go down on the yen if we get risk off. We've only got a very, very small position in this one, but it's doing okay. It's 160 pips. There's not too much volatility. And you can see what I've done here. Just a double trend line resistance. And you've got first resistance, 20-day moving average there. Then you've got big 108 resistance. That is a massive level for institutions. So 108.40, that's where our stop is, just behind the level. 107.19, where would you sell? I would go through the low, 106.80, and then we should go down towards the 102 level. So again, fantastic risk, or good risk to reward trade, near enough 5 to 1. So yeah, USDJPY looks good. What have we got? I'm trying to think of the last pair. Oh yeah, CHFJPY. The CHFJPY, it's not the fastest moving pair, but it's a very good risk to reward pair. Both currencies, the yen and the Swiss, you have negative rates on them. The Swiss did have a really big rally up, a little bit in sympathy with the euro, and came back down, and now we're poking up to try and take out 113. We did take it out there briefly. There we've tested, can't get through. There we've tested, can't get through. Got the 20-day moving average. We're trading around it. just through the low again. And yeah, it's like I said, it's not the fastest moving pair, but the risk reward on it is great. In terms of yen pairs, the week ahead, I really like the look of it. And you can see what we're doing really in terms of breakouts. We're looking for breakouts of levels that are big on the downside, normally round numbers. We obviously look for failed breakouts as well, or fake outs as people call them. Just use big levels to put our stops behind. And we always want that risk reward skewed in our favour. And yeah, all these trade setups offer, I think, if I'm right, more than 4-1. Yeah, if our view is correct, most are 5-1. So I've mentioned this frequently. If you get 5-1 risk to reward, okay, on trade, get 4 wrong, just 1 right, you're broken even. Get 2 out of 5 right, and you're in the money, so to speak. So yeah, like and look at the Japanese yen for the week ahead. We'll see what happens.